Hello and welcome to episode number 7 of Mortgage Strategy 101. Today we're talking about money management and in particular the bucket accounts. So your money management system should work seamlessly with your mortgages and your mortgage strategy. And our preferred money management system involves 4 common buckets: the grow bucket, the life bucket, and the fund bucket, and the investment bucket, all of which offset against your non-deductible debt if you have non-deductible debt. There are a number of lenders now who allow you to have multiple offset accounts, and they should be searched for as an option if you want to set up a money management system with clear feedback loops. Okay, so your salary goes into the grow account and your investment income goes into the investment account. In the grow account, we pay for our fixed expenses, things like utilities, insurances, childcare, kids' school education, loan repayments, and rates. Now, you may put all your fixed expenses onto a credit card once you've got your money management system in place, so you're building up your points, and the grow account is debited to the credit card each month once the system is set up, so you can go on more plane flights and holidays with less cost. With the life account, the life bucket is for your variable necessities. So you should set a budget, a weekly budget, and a set amount, a set weekly float comes across from your grow account into your life account. And then with your life account, ideally you use a debit card that has points to pay for everything. And then you're getting direct feedback each week as to how much you have spent relative to your weekly budget for your variable necessities: groceries, petrol, home repairs, medical bills, pharmaceuticals, and the like. Now, the categories you choose to put in your buckets is totally personal. Some people will put clothing in grow, others will put clothing in life. The point is that you have clear categories within your buckets and you set a budget that you get feedback on a weekly basis. So you have a float that goes across to your life, which might be $1,000, and then a float that goes across to fun. And so the fun bucket speaks for itself. It's the nice to haves: eating out, entertainment, going to the sport, drinking coffee or alcohol, gifts, memberships, babysitting. That all fits into the fun, are examples of categories within the fun bucket. So once again, you have a budget for fun each week, and ideally you have an ATM card or maybe even old-fashioned cash, so you feel the pain as you're handing over the money to pay for your fun, and you notice the cash dwindling in your wallet. And that way you're getting the feedback each week. Most of your debits for your grow account and your budget there happen on a monthly basis, but you've got to map out for a whole year to know if you've got quarterly payments, bi-monthly payments, half-yearly payments, or yearly payments, so your budget's clear. And then at the end of the month, you really simply can see what you spent and how much you saved. And that is the most common method. Now, my wife and I, we have a holiday bucket, and we have some other buckets as well. So it's totally up to you, but we have a budget for our year's holidays, and that comes out of our holiday bucket. The final one is the investment bucket. So what that allows you to do is be really clear on the cash flow for your investments, whether it's investment properties or shares. Your dividends and your rent goes into there, and then your repayment for your interest on your investment loans comes out of that account, and any deductible expenses can come out of that account. And that way you are really clear that your cash flow is positive or it's negative. If it's negative, you can actually have an awareness of what it is rather than mixed in with your personal spending. And you potentially can start with a float for the whole year. So you don't even need to think about it for the year. It might be $10,000, $20,000 if the investment has negative cash flow or is negatively geared. And that way you are able to keep really clear track of your investment spending and your personal spending, and it doesn't take long each month to review how successful you were with your money management on a monthly basis, and it totally interacts and connects within your mortgage strategy. So there you have it, an overview of the buckets, the categories within the buckets for your money management system, and some ways that it interconnects with your lending and your mortgage strategy. I hope you got some benefit out of that. If you'd like to find out more, please reach out to us for a meeting with one of our strategic mortgage brokers. And until next time, have a great day.